Hello, today we are solving May 2025 Unit 1. Really Tasty is a manufacturer of cheese, and we are trying to solve the part A2, statement of profit and loss and other comprehensive income for this Really Tasty manufacturer. So in the earlier part we had prepared manufacturing account. Okay, now we have to prepare the statement of profit and loss and other comprehensive income for the year. Okay, for this Really Tasty manufacturer. For this one, let's write the general format. First one, you have the revenue. So first one, you have the revenue. After that you will have opening inventory. Okay, opening inventory of finished goods. So revenue, then you will have opening inventory of finished goods. Okay, we are trying to calculate cost of sales. So in this you will have opening inventory of finished goods plus, then you will add up transferred cost of production. Okay, whatever you have got from the manufacturing, production cost. Okay, so production cost or cost of production, and then you will include less the closing inventory of the finished goods, less closing inventory of finished goods. So this is going to give you cost of sales. Okay, then revenue minus this cost of sales is going to give you the gross profit. So next you will calculate. So you will have to do less the cost of sales. Okay, revenue minus the cost of sales, so you will get gross profit. Okay, after calculating the gross of profit, let's calculate all the expenses. Okay, overheads, expenses in the business. So what are the expenses we have? So we have to less all the expenses. So the expenses are, okay, first one is the administrative wages. So let's write it here. Okay, first one is the administrative wages. And then you have allowance for irrecoverable debt. So allowance for irrecoverable debt, if it is a decrease, then we will go and include it as income here. But as of now, okay, I feel it is an increase in allowance for irrecoverable debts. If it has happened, it becomes an expense. Okay, any decrease in allowance for irrecoverable debts, that is going to be income if there is a decrease. So decrease in allowance for irrecoverable debts, it will act as income. So this will be added to the gross profit as other income. Then you have the capital, which is not going to come. Then you have cash and bank, direct manufacturing. Then you have drawings, it is not going to come. Electricity and water. So again, electricity, water, insurance and management salaries, 50% of them are going to be in the administration. So let's write all of that. So we have electricity and water, insurance, then management salaries, rent and rates. Okay, rent and rates. So all this are going to come under, okay, electricity and rates. So all this are going to come, okay, under the expenses cost. Okay, all this are going to come under the expenses cost. Then after that, so we have electricity and water, then general administrative expenses. Okay, general administrative expenses will also come here. So let's write that also, general expenses, administrative expenses. Okay, then we have indirect, it's not going to come, inventory, then irrecoverable debt. Okay, irrecoverable debt is an expense. Okay, so irrecoverable debt we have to include as an expense. Then we have management salaries we have included. Then we have provisions. Now depreciation of the office fixtures and fittings. Okay, depreciation for office fixtures and fittings. For office fixtures and fittings. And then you have the revenue here, trade payables and trade receivables. So that's all, these are the expenses we have got. So now next one, you will add up all these expenses and then you will calculate the total expenses. So then gross profit plus other income minus the expenses, it is going to give you the profit for the year. Okay, so now let's write this. Okay, let's write all the values here. So finally you will get profit for the year. Okay, profit for the year. So total expenses you will calculate. Before that, you will calculate the total expenses. Okay, total expenses. Now let's, and then we will subtract the gross profit and other expenses. In gross profit plus income minus the total expenses is going to give you profit for the year. So now let's write the values. First one is the revenue. Okay, so let's write the revenue here. So the revenue is going to be equal to 480,000. So the revenue is 480,000. So let's write its value here. So let's write the revenue. So revenue is 480,000. 480,000. Then you have the opening inventory of the finished goods. Okay, opening inventory of the finished goods. Okay, that is going to be 37,600. So let's write it here. 37,600. Okay, this is the revenue. Then you have the cost of production, which we had calculated earlier. It is 289,200. 289,200. So let's write that 289,200. And then you have the less the closing inventory of finished goods. So that is going to be equal to 40,100. So less the closing inventory of finished goods. 40,100. Now let's calculate, add these two up and subtract 40,100. It is 286,700. So 286,700. So 286,700. 286,700. Okay, you will add up, you will subtract, then revenue is 480,000 minus 286,700. So that is going to give you the gross profit. So the cost of sales is 286,700. Okay, then you will subtract 480,000 minus 286,700 to get the gross profit. So that value is going to be equal to, so that is 193,300. Okay, then we will see, calculate the allowance for irrecoverable debts. Okay, allowance for recoverable debt is trade receivables is 50,000 minus 2,000 and allowance, okay, 5%. So let's calculate that value. So 50,000 minus 2,000 and then it is 5%. So that is going to be equal to, so 50,000 minus 2,000, okay, into 5%. So that is 2,400. Okay, so 2,400, this value 2,400. Now the increase or the decrease we have to calculate, whether it has allowance was 2,000 but now, okay, so but now it is 2,400. So there is an increase in allowance. So this is going to be a expense of around 400. So increase in expense of in the trade in the allowance for irrecoverable debts is about 400 increase. So that is going to be equal to, it is going to come under the expense of 400. Okay. It is not a decrease, there has been increase. Okay, earlier it was 2,000, now the trade receivables, okay, to a 50,000 minus 2,000 and a 5% of the allowance is made. So that value is 2,400. So minus 2,000, it is going to give 400. So there is an increase in allowance for irrecoverable debts, which becomes an expense to the business. Then next one is a this is a gross profit, then there is no other income, then administrative wages. So let's write administrative wages, which is 75,000. So administrative wages are around 75,000. Then you have this one. Then you have electricity and water. Electricity and water all are 50%. So in the previous one, whatever you wrote, you just write half of it here. So we had calculated earlier 50% of 12,000. The electricity and water was 12,000. So 50% of 12,000 is going to be equal to 6,000. So it is 6,000. So we can copy here the same thing. So 50% of 12,000. 50% of 12,000. So for electricity, then we have the insurance. Insurance is 50% of the insurance value is also was calculated earlier 3,800. So 50% of 3,800. So that is equal to 1,900. So that is equal to 1,900. So it is 1900. And then you have the management salaries, which is 102,000. So 50 percentage of 102,000. So let's write it here. 50 percentage of 102,000 is 51,000. So let's write 51,000. And then you have the rent and rates. Okay, the rent and rates were around 14,800, and there had been adjustments, right? So the something was prepaid, so that means you would have had to subtract. Okay, so that is minus 1,400. So we have to do, so adjustment has to be done. So 14,800 minus 1,400, so, and 50 percentage of that. So 50 percentage of 14,800 minus 2,000. So that is going to be equal to, 6,700. So that is 6,700. Okay. Then general administrative expenses. So general administrative expenses were 14,500, and there was no adjustment to this. Okay. So general administrative expenses was 14,500. So let's write it directly here, 14,500. And then irrecoverable debts. In irrecoverable debts, we had calculated here. It is, okay, irrecoverable debts had increased by 2,000. So 4,000 plus 2,000. So we have to write here 4,000 plus 2,000. So that is going to be equal to 6,000. The irrecoverable debt had become 6,000. And then now we have to calculate the depreciation charges. Okay, the depreciation charges we have to include. So let's calculate the depreciation charges. Okay, the depreciation charges are going to be for the office fixtures, office computers and fixtures and fittings. For office computers, they have given 30% per annum using reducing balance method. Reducing balance method is cost minus depreciation times the rate. So let's write the cost first. So 45,000. So depreciation calculation for the office fixtures is 45,000 minus, okay, the provision was 30,000 and multiplied at the rate of, the rate is around 30%. So that is going to be equal to 45,000 minus 30,000 times 0.3. So that is 4,500. So the depreciation charges for the office fittings is, so that is going to be equal to 4,500. So that is going to be equal to 4,500. So that is the depreciation charge for the office computers. And next one is the fixtures and fittings. Fixtures and fittings, they have said that they are depreciated at the rate of 10% per annum using straight line method. So cost times 10%, that is the straight line method. In the straight line method, it is just, you will have the cost. You don't have to depreciate, you have to just include cost times the R value, depreciation rate. Okay, so the cost is 30,000. Okay, the cost here is 30,000, 10 percentage. So 30,000 times 10 percentage. So that is going to be equal to 3,000. So that is 3,000. So let's write the depreciation charge as 3,000. Now let's add up all that and get the total expenses. So 75,000 plus 400 plus 6,000 plus 1,900 plus 51,000 plus 6,700 plus 14,500 plus 6,000 plus 4,500 plus 3,000. So that is going to be equal to 169,000. So the total expense is 169,000. So this is going to be your total expenses. So 193,300 minus 169,000. So that is going to be equal to the profit for the year. So the profit for the year is going to be equal to 193,300. Okay, 193,300 minus 169,000. So that is equal to 24,300. So 24,300. So this is the profit for the year.